Hello and welcome to BQ Prime. Joining us today is Mr. Rajan Sethuraman. He's the CEO of Latent Analytics. He speaks to us after the company's fourth quarter results, where net profit sequentially fell 35%, almost 35%, while the revenue declined 3% to 141 crore. The company, however, said this is their highest ever annual revenue figures. Mr. Rajan, welcome to BQ Prime. First of all, tell us what you do and what is your reaction to these results?
Yeah, sure. I mean, we are a data and analytics company. We help organizations use the power of data and analytics to make high quality business decisions. A lot of the work that we do are with business sponsors and stakeholders, like the chief financial officer or the chief marketing officer or the chief HR officer, solving their business problems, which could directly either impact their top line, right, in terms of revenue or cost control, right? And those are the nature of the initiatives. We use the power of both diagnostic and descriptive analytics, which is what is called as look back analytics, trying to understand what happened and why it happened, or using technologies around artificial intelligence and machine learning to predict what is going to happen and what should you do about it, right? So these are the kind of questions that we go after. Typical nature of work is very consulting, iterative, fuzzy problem solving. And we bring together a mix of mathematical, algorithmic skills, technology skills, and also business domain skills, right, to be able to solve the problem. So that's the nature of the work that we do. If I were to kind of split the work, about 10-15% of the work will be upfront analytics strategy and consulting work, helping organizations think through what should be their analytics initiatives and strategy. About 25% of the work is data engineering, where we pull together data from different sources that an organization has into one platform so that you can do the analytics. And then the balance of the work will be the core analytics work itself, which itself is split about like 40% is predictive, 40% is diagnostic, descriptive, look back analytics, and 20% is look forward, predictive, prescriptive analytics. So that's the spectrum of work that we do. In terms of the results and my reaction to that, I mean, obviously, this quarter was a bit of a flat quarter for us. Traditionally, quarter four has always been a slow quarter in comparison to quarter three, because quarter three is when our clients exhaust their budgets, and quarter one is the first quarter for many of our clients in the US. And typically, projects tend to start a little slow once the year gets underway. However, this year, we are also seeing some amount of uncertainty and slowness in the market. For example, some of the fixed fee, fixed scope, one-off initiatives that we were doing, we would typically expect to find more initiatives that we can undertake for our clients and then have follow-on work. That has been delayed. And we're also seeing that some of the larger initiatives that we are pursuing, they are taking more time to come through. However, the good news is that the entire book of work that we did for the last year has been renewed. And as we stand today, our confirmed plus high probability extensions work for the next fiscal, which is the current fiscal that is underway, is already more than the revenue that we clocked for the last year. And we do have a healthy pipeline of opportunities that we are pursuing. Of course, we are still looking to see how the first and the second quarter unfolds, right, for getting back onto the high growth track.
So essentially, you're saying that because of the fallout of the banking crisis in the US and the interest rate hikes and the macroeconomic slowdown has exacerbated the whole Q4 picture that you said right now. Would you agree with that? And you see this? Do you see there's a spillover effect in Q1 and Q2 as well of this slowdown in spending?
Yeah,
because they'll be cautious, right?
Sure. Yeah, it's not just the banking crisis. I think it is the general environment of uncertainty that's been prevailing for some point in time. And of course, that's been exacerbated by the banking crisis. In general, we see that clients are more cautious when it comes to taking up new large initiatives. Much of the work that we do is very core to the business, in the sense that, as I mentioned earlier, it all addresses top line and bottom line impact for companies. So therefore, it's good that all of that ongoing work has been renewed and we don't see any slowdown on that. However, new initiatives, when it comes to spending big dollars on experimental initiatives and new initiatives, clients are more cautious about it at this point in time. I would say that quarter one and quarter two are going to feel the effect of that uncertainty. And we're expecting that there'll be a better bounce back as we get into the second half of the year.
Okay, so what about the whole FY24 picture then? If there is a bounce back in Q1 and Q2 you were talking about, what are your forecasts for your business in terms of revenue as well as like guidance for whole of FY24?
Yeah, in general, we don't put out a revenue guidance as a specific number. What we have been maintaining in the past, and this is something that we will reiterate, is that we will continue to do much better than the industry growth rates. I'm sure that you are hearing commentary from many of the other IT services companies and even analytics players in the market that the growth is getting impacted because of the uncertainty. We have been doing 5 to 10% better than the industry, right, on the back of the very specific value propositions and offerings that we're taking into the market. We are very confident that we'll be able to maintain that kind of an industry-beating growth in this year as well. Having said that, we are expecting that the entire industry will get impacted at least in the first half of the year. And if things get back on track sooner, then we could see an uptick. We are very confident, however, though, that we will continue to have growth in FY24 as well. What that growth percentage will be will also depend on how the crisis and how the uncertainty is resolved.
So, do you see the growth returning in a hurry? I mean, okay, this is now done, and now it's time to grow again. First part of my question. The second part of the question is, even for the wider industry, we are expecting a slower FY24. What do you think about FY25 if it may not be too early to gauge at this moment?
Right. No, I don't think it's going to come back in a big rush and a hurry. Right? If you go back to the pandemic times, there was a period of about 6 to 9 months when things slowed down. But when things came back, then it came back in a big rush. I'm sure that once the demand picks up, it will be a fairly significant pickup in demand. But the time frame for that to happen, it is a little bit of a guesswork at this point in time. Right? I mean, it could be a couple of quarters. Maybe it could be a little bit more time than that. What we are doing as an organization, though, is to make sure that we are gearing up well for when the demand picks up. So in terms of the investments that we are making into the front end, into the capability building, into the assets, accelerators, value prop, we have made about 450 offers on campus. We're going to go ahead and then bring them on board, right, in a phased manner. So all of that is happening so that we will be well positioned, right, when the growth returns. FY25 is a little too early, but the general news that I'm hearing from many of the clients and prospects that we talked about is that everybody is hoping that this uncertainty will get resolved in the next couple of quarters. And if that happens, the second half of this fiscal itself could see a bounce back. And in which case, like my FY25 will be a fairly strong year.
But you know, the second half, I mean, like we discussed earlier also, you mentioned that is Q3 is mostly a slow quarter because of furloughs. Q4, you said clients generally exhaust. So are we looking at a washout year in FY24?
Not at this point in time. I mean, Q3 is a very strong quarter for us, actually.
Okay. In what sense, sir?
Yeah, because for many of our clients, our Q3 is their Q4. And that is when they have leftover budgets, right, from the entire the year's budget.
Like
in general, we have seen that in that quarter, many clients are even ready to actually take up new initiatives so that they can
Q4, you said
some of the initiatives that they might have put on the back burner, they come back into the limelight. So Q3 has always been a strong quarter for us traditionally. We're expecting that kind of a bounce back will be there in this year as well. Q4 will, as usual, right, it could be a slower quarter, but we don't typically see too much of shrinkage happening in Q4. This year has been exceptional, right? The quarter that just ended because of the reasons that I mentioned earlier. So typically Q3 to Q4 is either flattish or there is a slight uptick that we see. If the first half of this year is very slow, then I'm expecting that the second half of the year, right, if things pick up, Q3 and Q4 both will be good quarters. So that's the expectation at this time.
Okay. So in this evolving situation, how do you see your hiring to play out? Are you going to hire expecting future growth, or are you going to push, I mean, be some bit cautious and let you wait for the growth to come and then hire? What are you planning on those lines?
Right. So even from the last year, we have kind of pivoted to a model where more of the hiring happens at the entry level from the campus as opposed to doing a large quantum of lateral hiring. And we are continuing on that trajectory this year as well. As I mentioned earlier, we have made about 450 plus offers on campus, right? And these are all people who are waiting to join us starting the June-July timeframe. The onboarding of those people will pan out based on how the demand trajectory picks up. But at this point in time, there are enough opportunities at various stages of closure, right, in the pipeline. And I said that we already renewed the book of work that we have. Attrition is another factor, right, that we'll have to look into in terms of, though it has slowed down significantly, there will be some attrition. So there will naturally be backfilling that we'll have to do for that attrition as well. So I would say that at this point in time, we have kind of stitched up what we need, at least for the next couple of quarters. If demand bounces back very strong in the second half of Q2 or in the second half of the year, then we will obviously go into lateral hiring, and then we could also do more of the open campus hiring, meaning that not go to a specific campus, but we actually announce openings that are available at the entry level, and these will be open to anybody who has passed out in this year or the last year. So we will go back to those measures.
So how many people are you looking to hire this year?
So we already made about 450 offers on campus. So all of them will be joining us. We are at about 1,115 odd people at this time. That 450 additional count will mean that it will take us past the 1,500 number. I mean, of course, we'll have to see how attrition pans out. We will calibrate it a bit. I mean, all lateral hiring will be calibrated based on what we see in terms of uptick in the demand trajectory. But otherwise, from a campus hiring perspective, we have made a good number of offers, and we're just waiting to onboard them.
All right. To my final question, Mr. Rajan, there is a new buzzword that is called ChatGPT and generative AI. How is that impacting your business, both in terms of changes, what client expectations that you are seeing from you, as well as disruption maybe in your own business?
Right. So as you said, it's evolving very rapidly. In fact, probably people, I mean, at least the breadth and spectrum of people wouldn't have heard about GPT-3 or 4, right? Even 3 months back or 6 months back. It has now become the buzzword for everybody because of ChatGPT, right? And the ease with which it is available, right, for people to interact with and use at this point in time. However, I kind of go back to the points I've made in earlier media interactions, right? We are in the business of understanding behavior, right? Whether it is human behavior or process behavior or machine behavior. And human behavior in particular is a very, very complex topic, right? There are several layers that you'll have to peel to get to the heart of how people make the decisions that they make. Why do they buy what they buy, right? Why do they do what they do? And I think generative AI as well, while it is starting to peel some of those layers, we still are quite some distance away, right, in terms of getting to the heart of understanding human behavior in its entirety. And I think that is where the combination of technologies like Gen AI and human intelligence, right, can be really helpful. So what I expect is that the new wave of technologies, including generative AI, will actually will lift the entire playing field, right? I mean, most organizations will be able to significantly uplevel themselves, right, in terms of getting routine things done, generating some of the interactive insights, for example, right, through the generative AI mechanism. However, what it will provide is plenty more opportunities for people with the creativity, with the multidimensional skills that I talked about earlier, to come and then apply their human intelligence on top of it, so that you can come up with even better decisions, more optimization, right, and so on. So in some sense, people who know generative AI, how well to use them, will potentially replace, right, people who are not tuned into that stuff. With that in mind, we are looking at embedding generative AI and GPT-4 kind of technologies into all of the value propositions that we are building, right? So if, for example, we are looking at supply chain capabilities, and we have a connected view value proposition, which is aimed at bringing one integrated view of the entire supply chain, right, for all the personas there. Can you then use a technology like GPT-4 to surface insights when you may not have any a priori hypothesis? If I know what I'm looking for, then it is easy to go and find the data, do the analysis, and get that insight. But if I don't even know what I'm looking for, right, what should I be bothered about on my supply chain today, right? So can GPT answer those kind of questions, right? As I write to work on Monday morning, if I'm a supply chain planner, I have this technology helping me tell these are the top 3 issues that you should handle this week, and this is what you should be looking at, right? So that's the type of orientation that we are going towards. How can you use technologies like these, right, to find those type of insights? All
right. Thank you, Mr. Rajan, for speaking with us today. Thank you, viewers, for joining us. This is Tushar for BQ Prime.
Thank you.